Good morning. We're here to study LAYN and we'll start by technical analysis. This is the long-term chart going back to 92 when the company had its IPO at about $7. Then it had this nice bull market here until 97. Then a severe bear market that took it to a low of $3 or so. And yesterday the stock closed at a new all-time high, as we'll see here on the short-term chart. Here it is with the results presentation yesterday. It had this huge gap up, and well, this candlestick isn't bullish. The stock might pull back to close this gap. At least that's what the candlestick theory says, but it is often wrong. So let's check the fundamentals. Technical overview first. Sorry. The long-term trend is bullish as the stock closed at a new all-time high yesterday. The short-term chart shows some challenges, as yesterday's candlestick is bearish and there's a big gap open between 37 and 39.17. Now, fundamental analysis. This is the share count since 97. It was 8.9 million shares outstanding in 97 and 15.7 million now. It has been growing at a 5.84% average annual pace, and the market cap has been rising at a 18.4% compound rate too. So market cap now is $626 million. Let's move on. This is the balance sheet analysis. We have long-term debt and the current ratio. Long-term debt is rising. It was 199 million in 06. I have on the press release it says 152 million, but let me check here on the third quarter where I have that information. Let me see. It was 131 million here in the third quarter, fiscal third quarter. So I'm not sure about this 152 million number. The company doesn't have a complete balance sheet on yesterday's press release, but the current ratio is going down. In the third quarter it was just 1.45. I like to see it above 2, so the short-term liquidity picture isn't very healthy. It has been deteriorating a bit here, as you can see. So the balance sheet is a bit weak generally. As for revenues and gross margin, you can see revenues were kind of dead between 98 and 2004. In this 1, 2, 3, 4, 5, 6, 7 year period, revenues declined. And since then they are growing a lot in 05, 06 and 07, and I've considered the 2000 number as the base, and the revenues this way they are growing 39% a year on a compound basis, and the industry average from from 2005 grew just 13.6%. So our company is growing much faster than the industry recently, but it doesn't have a past of great growth. You can see here there wasn't any growth until 2004. Just beyond that, gross margin is 25.8% for LAYN, and for the industry average is 18.3%. Price to sales ratio is similar at 0.87. Let's move on. As for earnings per share and net profit margin, well, we have the same erratic picture here, and with the losses here in 2000 and 2001, but small profits in 02, 03 and 04, and now they're growing nicely to 1.68 earnings per share in 07, which beat estimates that were calling for, let me see here, analysts were expecting, let me see if I can put this here, no, for 1.48 earnings per share, and they came in at 1.68, so the company beat estimates. Net profit margin has also been rising. You can see it was just 0.3% in 02, 0.7 in 03, 1.5% in 04, 2.6% in 05, 3% in 06, and 3.63% now. So they're rising nicely, and price to earnings ratio is 23.7 for our company and 22.5 for the heavy construction industry. Let's move on for the fundamental overview. There has been 5.84% average annual dilution over the past 10 years, but not much in fiscal 07. Balance sheet is weak with a current ratio of 1.44 and growing long-term debt. Revenues were stagnant until 2004 and since then are growing at a 39% annual compound rate. Next, net profit margin has been slowly expanding since 2002 but still low at 3.63% now. And with these fundamental trends, I get to these long-term estimates and basic assumptions for the next 10 years. Dilution rate will be 3% a year. It has been 5.84% a year, but I'm not expecting all that much going forward. So let's stick with 3%. Revenues will grow 25% a year. Perhaps I'm being a bit optimistic here. They're growing 39% for the past 3 years, but before that there wasn't any growth at all. So I'm a bit afraid the revenue growth stalls again for a long period. There's that risk. And net profit margin will expand to 5%. Over the years, it has been expanding about 0.6% a year. So I guess it will go to 5% if revenues keep growing, but that's a big if. If these assumptions are met in 2017, LAYN will have revenues of 6.73 billion, a net income of 336 million, because I'm considering the 5% net profit margin, which means 15.92 earnings per share. This is considering the 3% dilution rate. Apply an average 16 times earnings multiple and get a 254.8 stock in 2017. And that implies a compound annual growth rate for the share price of 20.4%. Well, above 16 I think it is attractive, but I'm a bit afraid there's some risk to this forecast, because 25% a year revenue growth, I don't know if the company will achieve that. It can be more. It has been 39% over the past 3 years, but I'm worried about the past and those 7 years without any growth. So I'm a bit afraid of this forecast. In normal conditions, if the company was more stable in its growth, I would consider the stock very attractive and I would probably buy it. But since it has been very erratic in the past, I'm not confident enough to buy it. But still, on a 1 to 10 scale, I give it an 8. Okay, thank you, bye.